Hey, good morning, everybody. Today is Thursday, April 28th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning by taking a look at our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 13 came from oil exploration and production, 8 came from semiconductor devices, 6 came from commercial vehicles, and rounding out the top 5, we had medical devices, healthcare facilities, consumer finance, all with 6 stocks in the 100 most powerful stocks in the most powerful industry groups. Oil exploration and production recently has been showing a lot of strength, as has semiconductor devices. Medical devices and healthcare facilities also have been showing a lot of strength recently. These may be good places to look for strength in the market going forward here. Let's take a look at the Russell 2000 this morning. As we've been noting for a while, I believe the Russell 2000 is the key to the market going forward here. Russell recently took out resistance here in the 1140 area. As long as we can hold that area, I would be pretty comfortable being bullish here. If we were to break down below the 1140 area, I might not be so bullish on the market. Right now, the Russell's bracketed by support down here in the 1140 area, but we really haven't left that support area behind. And resistance up here in the 1205 range. We'll continue to keep an eye on how the Russell 2000 acts here and gauge how we want to view this market based on how the Russell behaves. Let's take a look at the Nasdaq Composite. But before we do that, stocks closed mixed yesterday as investors took a big bite out of Apple, but reacted positively to the lack of movement by the Federal Reserve on interest rates. The S&P 500 recorded an accumulation day, or a day of professional buying, while the Nasdaq posted another distribution day. A distribution day is any trading session where the S&P 500 or the Nasdaq closes at least 0.2% lower on heavier trade than the prior day. Distribution is a sign of institutional or professional selling in the market, and too many distribution days in a short period of time can indicate that an uptrend is in trouble. Current distribution levels are a concern. As a result, the current market outlook is an uptrend under pressure, according to investors.com. Meanwhile, our market timing model remains on a buy signal, but may be showing signs of strain. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. The lack of names on our universal watch list remains a bit of a concern. We added another 4 stocks to the list yesterday, which brings the current total to 45. In a healthy market, we'll generally have between 50 and 90 stocks on the universal watch list. The weakness in our universal watch list indicates a weakness in market leadership, although the trend seems to be more bullish. Advancing issues outpaced decliners by nearly 7-3 yesterday. The New York Stock Exchange advanced decline line continues to look bullish. New highs bettered new lows. According to our Ramosi ratio, small capitalization stocks bettered large again yesterday and continue to outperform on a 10-day moving average basis. This is a bullish indication. Bulls prefer to see small caps outperform. The market appears to be struggling to define short-term direction recently. While we're seeing signs of strain in the market, we remain cautiously bullish. This may be a good time, however, to begin reducing any remaining margin in your portfolios. Be careful, and as always, keep your stops in place. Nasdaq yesterday was down 25.14 points, or just over 0.5%. We closed at 48.63, and notice how we gapped below and closed below this long-term trend line. This long-term trend line, as we've been noting, goes all the way back to the beginning of the bull market in 2009. We undercut that level. We also undercut the 200-day moving average, which we show in black, but we managed to recapture that before the close yesterday. Trading volume yesterday was higher than the prior day and higher than average, giving us another distribution day in the market. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since February 18th. We currently have 6 distribution days in the past month. That's a lot of distribution. And that distribution, particularly these 4 days recently, are the reason that our uptrend is under pressure. Right now, the Nasdaq seems to be bracketed by support all the way down here in the 4506 area. We have minor support at the 200-day moving average. Hopefully we can continue to hold that. And we have resistance up here in the 4900 range. Our market timing model right now is on a buy signal. But before we leave the Nasdaq, I want to talk a little bit about how we transition from a buy signal to a don't buy signal. Let's take off these markups. To go to a don't buy signal on the market, we're going to look for 4 things. First, we're going to look for the Nasdaq to be trading above its 200-day moving average. Right now, the Nasdaq is just clinging to that 200-day moving average, which we show in black here. We're going to look for the 10-day simple moving average to be lower than it was the day before. We show the 10-day simple moving average in green. You can see that currently it's lower than it was the day before. And we're going to look for the 21-day exponential moving average to be lower than it was 2 days prior. We show the 21-day exponential moving average in pink, and currently that also is lower than it was 2 days prior. And the last thing we're going to look for is for the market to close at least 1% below its 21-day exponential moving average. So let's throw on an envelope around our 21-day exponential moving average, and we see that we're trading just above that lower 1% line. If the Nasdaq closes below that lower 1% envelope line, our market timing model would switch from the current buy signal to a don't buy signal. Let's see what the S&P 500 is up to. The S&P yesterday was up 3.45 points, or 0.16%. We closed at 2095 and closed in the upper half of our daily trading range. Bulls like to see the market close in the upper half of its daily trading range. Yesterday we added the 50-day moving average to our chart, but I never talked about the golden cross. This is the golden cross. Notice how the 50-day moving average, which we show in red, has crossed above the 200-day moving average, which we show in black. That golden cross is a bullish indication in the market. Certainly long term it's bullish. Short term it's really not much of an indicator. We saw a golden cross back here as well in the market, and that one didn't work out so well. Notice how we crossed back the other way a few days later. Hopefully this cross will act a little bit better. Yesterday, trading volume on the S&P was higher than the prior day, giving us an accumulation day. For you followers of William O'Neill, we are in an uptrend under pressure. The S&P 500 has been in an uptrend since February 18th and has 6 distribution days in the past month. Those distribution days, like the Nasdaq, are the reason that the S&P 500 is in an uptrend under pressure. Right now the S&P is bracketed by support down here in the 2044 area and resistance in the 2116 range. Notice how the 10-day moving average in the S&P is acting a lot better than on the Nasdaq. The 21-day moving average is also acting better, and we are way above the lower envelope, the lower 1% envelope on the S&P 500. So the S&P 500 which right now is on a buy signal on our market timing model, doesn't appear in any danger of going to an immediate don't buy signal. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.